Good morning, traders, and welcome to this gold rush. The moment we are looking at what maybe you can begin by looking at what gold did yesterday. Yesterday we had the NFP. Sorry, I think my mind is so much on the NFP tomorrow, but we had the federal funds rate, whereby the Fed were able to maintain the rate at 4.50%. So they held the rate steady. And we were able to listen also to the press conference, the press whereby we saw the Fed chair, Jerome Powell, highlighting or giving the reasons behind the rate cut, behind maintaining the rates unchanged. So he talked about inflation remaining somewhat elevated. He talked about uncertainties about the economic outlook, which also remains elevated. And he said that probably the committee will continue monitoring the implications of incoming information from the economic outlook. That's starting probably with the data that we are spitting today. That is the core PCE price index, which is also an inflationary data, right? It's an inflationary data as well. And also the tomorrow's NFP that will be anticipating around 3:30 p.m. So yesterday in our analysis, we were looking at price coming to these particular levels so that we can get some sales opportunities. But the price missed our entry because the price we saw gold. The dollar index start strengthening yesterday after the release of the ADP non-farm, which came positive, and also the advanced GDP at 330, which was also positive, and we saw gold really gain the momentum to push on the downside. Nevertheless, we were looking at these channels, so these are some of the chart patterns that are very important. You combine them with the ICT concepts, they really work really well. So but the price just moved in our anticipation, only that it missed our setup. And as you know, the rule of trading, you don't rush your entries, all right? You don't trade from a point of formal. That is a fear of missing out. So I just watched as the market drop anyway, all right? So for today, so let's begin looking from the daily time frame. So when we look at today, what we are seeing here, we are seeing some signs of more bearishness. All right. So because what we are seeing here is the daily engulfing. So price in this particular daily engulfing. So that's where the market is tapping, and we are seeing maybe some form of rejections. However, if you look at this particular zone, it's quite big, about 213 pips. So you cannot have a 213 pip stop loss. All right. That's really high risk. So what do? We go to the lower time frames, the 4 hour time frame, and now we minimize that, the order block there, or we can use the engulfing like that. Okay. So we have it as such. So we wait for the price to come to that level. Still, maybe probably if you look at the risk, we are talking about 75 pips. So if you feel 75 pips is quite good for you, maybe. But for me, I want even more lower risk, right? So I can go to the 1 hour time frame, and now I have my setup like that somewhere there, right? I'm trying to consider these engulfing. I'm trying to consider these order block, the daily order block here, because we have a very nice structure. The price are giving us a BOS there. So we anticipate the price to push up to this particular point, even as it retests this particular OB, right? As it retests this particular trend line that we had the price breakout from. Okay, so that tells you that the first point of interest that we'll be looking at is this particular level, right? This is the level that we'll be anticipating to get some sales, right, from that particular point. Okay, so we will adjust accordingly as the price reaches there. So for now, this is just to give us a clue of what we are anticipating. And I'll be targeting the lows at this particular point, all right? These liquidity levels here to that particular level. And once we see that, we might be able to see some retracement, but overall, maybe probably the price pushing all the way down to this particular level. Okay, we have a zone here at 32.55 level. But first of all, let's eyeball these are particular lows that the price created yesterday during the FOMC. Okay, so if you come to the 15 minutes time frame as well, or maybe probably even we here in the 1 hour time frame, you saw how price was struggling to break above this particular point because here we had an engulfing. The price reacting from this engulfing, I think about 50, 72 pips, all right, about 72 pips. Then we see the price continue pushing higher because again, this is the best level to look at because this is the most premium level that we can be able to look at the selling opportunities, right? So that's what I'll be looking at today. If you come to the 15 minutes time frame, you can see still the structure rhymes very well to where we are splitting or where we want to see the price come. So that's why we'll be looking the price coming to this level, and then maybe probably we look at some selling opportunities. You can see these two levels are very close to each other. So what can happen is that either the price can tap this level and push down, or we can see the price throughout the weeks all the way to this particular point before now the price are pushing on the downside. Okay. So let's monitor what the price does, but these are two high probability sell setups. If you look at the data, like you have said, today we are looking at the core PCE price index at 330. We are looking at the employment cost index at 330 as well, and also the unemployment claims. So depending on how the data is going to come out, maybe the price can reach to these levels or maybe these levels. So it's important to monitor what the price is likely to do. All right. So apart from what is listed in the economic calendar, we are looking also at we aren't the price. We might have some volatility, especially with the tariff, as different nations try to rush to beat the August 1st deadline. That is tomorrow's deadline, and therefore the market can be we can be able to see maybe we might be able to see a very choppy market or a very volatile market today and tomorrow, as different nations rush to beat the August 1st deadline. Already today morning, we have seen a deal sealed by South Korea, 15% tariff on South Korean imports, which has come out under new deal. And some of the key details in this deal is that South Korea agrees to invest $350 billion in US projects. Also, these projects include shipbuilding, chips, and batteries. Also, South Korea to purchase $100 billion in US energy products. All right. So it's quite a heavy packed deal. And countries like India, which have maybe probably not responded or they have refused to move away from the cheap Russian fuel, we find Trump imposing a very hefty tariffs and fines as well. We had also confirmation about the 50% tariffs on Brazil. So and also there was some adjustment to the copper tariff to exclude the raw materials. So with that, like I said, we might be having a very choppy, a very busy market, a very choppy, volatile market. So it's good to monitor what transpires and ensure that you exercise a proper risk management. Right, you exercise a proper risk management even as you trade, so that you don't you don't find yourself losing more than you can afford to lose. Okay, so with that, until tomorrow's gold rush daily, stay focused, stay disciplined, and trade with purpose.